Welcome to podcast here for Beck's. I'm grain marketing consultant Matt Bennett. We're going to talk a little bit about markets today. We didn't have a podcast there last week. I went on Beck's trip actually with my wife, so I was able to get down to the Dominican. Had a great time. Got to meet with several people that are probably watching this because I talked to a lot of you that actually have been watching and following along. So, one of the main questions I just continue to get this winter is, what do you think acreage is going to look like, first of all? And second of all, what do we do with all this old corn? Obviously, soybeans have had a little bit of a nice run here lately. I'm going to actually start there. I want to talk, essentially what happened was with the bean market. President Trump said that he talked to President Xi from China, said that they might buy 8 million metric tons of soybeans. I mean, that's literally what he said, is that they might do this. And there was no parameters there. There was no signed agreement there. What the funds have done have stepped in and bought soybeans to a large degree. And so we've taken off on this rally, 50, 60 cent rally. First of all, based upon, could have a possible type thing. The thing is that the funds last week, as of the Commitment of Traders report, bought almost 90,000 contracts of soybeans, which is actually the second largest amount of beans they've bought in a week's time, according to that Commitment of Traders report. So, what we've seen is that the funds have got renewed interest in owning soybeans. You might ask, why are they wanting to buy beans whenever Brazil's got this massive crop and world supply is still where it's at? If you looked at 8 million metric tons of soybeans, around 300 million bushels, give or take. And so 300 million bushels of beans, whenever we have a carryout currently forecast at 350, makes a lot of these folks think, hey, there could be a chance that this U.S. balance sheet could get razor thin. Is that possibility there? Yeah, it is. But still, we have to keep in mind one thing. U.S. soybeans currently are around $1 more expensive than what Brazil origin soybeans are. And clearly, they're right in the middle of harvest. Uh, Sometimes there's a little bit of a discussion as far as quality goes. Not often do the Brazilian growers get to harvest super dry beans like some of us did this last year. Sometimes they actually have to take those beans and dry them. So quality is a bit of a concern at times. You can make that claim, but at the same time, $1 is a big deal. And so, what's the play there? Well, I think China's still of the opinion that if they can keep in good graces with the U.S. and not have to worry, about some sort of a tariff situation, that they're willing to pay up for those beans because they're getting it on the other side, so to speak. So, one thing I've been telling people, as far as old beans go, what a gift that we've seen here. What a gift that we've seen with new beans as well. And hedging off some risk after this type of a rally certainly makes a heck of a lot of sense to me. Could they go on up? Of course they can. But whenever you've seen a rally like that, I always say a rally is not a rally unless you take advantage of it to some degree. Yeah, looking at corn, as far as old corn goes, the tough thing is that the commercials have not buy. So like your end users, they have not bought a ton of corn off the grower. Essentially what's going on here is that the grower's been a little more tight-fisted, a little bit less apt to sell. But anytime that we've seen these small rallies, like for instance, last week only rallied a couple cents. Anytime we see these rallies, what we're seeing is a lot of farmers selling. And what that does is it makes it a bit of a stiff headwind to try to get cash prices to rally, substantially. What happens is whenever the board rallies, we're seeing basis stagnant and in some cases widen out just a little bit. The reason they have to widen out is they've got to slow the flow of that grain coming because, sometimes they run out of space. Sometimes they just simply don't have the room for the grower to bring more. And so they have to widen out basis to discourage that corn to show up. And with a 17 billion bushel crop, that's most likely what we're going to see occur here, for the next few weeks even. And so, if you're really looking for a basis pop here, first of all, you just got to ask for one. The worst thing they can tell you is no. But second of all, if we're really kind of thinking that's what's going to happen or that's what we're waiting on, I think you're going to have to get closer to spring planting time frame when all of us are busy, and if you do have the resources to be able to move grain at that time, I think you'll get that basis push because demand is still incredibly strong. We've seen exports continue to be strong. USDA WASDE report for February showed us last week, which I couldn't detail because we didn't do the podcast, but they actually raised exports 100 million bushels. This is the only adjustment they made. And so they raised exports to 3.3. That drops your carryout down to like a 2.1. But they didn't do anything with feed usage. And if you've heard me on here, I still think feed usage is too high. But long story short, is there a chance we could actually sell 3.3 billion bushels of corn this year? Actually, there is. We're quite competitive on the world market, contrary to soybeans. Brazil is just now trying to get that safrinha crop planted. And quite frankly, they're having some issues because they've had too much rain. And so if that continues, right now they're less than 20% planted, where they're usually like 35 to 40% planted. If that trend continues, you could expect that you might see some strength here in corn, and maybe more so along the lines of new crop than anything, just basically to hold on to the acreage. And so, your spring insurance price right now is fluttering right around 460. To me, insurance might be one of those things that we have to tip our cap to as something that could really impact the acreage decisions. You can cover more revenue, if you will, as far as your insurance goes this year for less money invested. And so I know most of you have probably gotten well versed on that. Certainly, let us know if you want to learn more about that. I personally don't sell crop insurance. I've got a lot of people on my team that do, and it's certainly a discussion that we've had with a lot of growers. If we look at over the course of time, those outlier years where we have actually planted a lot more corn, the following year, we typically fall back 3 to 4 million acres. So last year, you're 98.8. Would you fall down to 95 or below? It's possible. But I do think you've got to be careful in making that assumption, given the fact, once again, that crop insurance is likely, let's just look at it this way. If you buy crop insurance this year, it's more heavily subsidized. And so the chances for the amount of investment that you put into it, that you'll get some sort of a payout on insurance is greater this year than what it's been in the past. It takes less money to cover yourself. And so I do think a lot of growers are going to take a very strong look at continuing to plant corn. Now, the one other thing on the other side of things that maybe complicates it somewhat, is that you've got November beans. They're trading as we speak at 11.17. And so beans over $11 for a lot of growers, especially in areas like where I'm at, you can make the case that you could actually do better on beans than corn. So University of Illinois came out with a Farm Doc article detailing what 4 different regions in Illinois look like. And in all 4 of those regions, their projections were actually that beans would net out better than corn. Now, in an area where yields might not be as robust as in parts of Illinois, because we've just been super fortunate the last several years, I think, due to environment, due to things that I don't even understand, we've certainly seen excellent soybean yields. Before this past year, our average was actually a little over 80 bushel for the last 5 years. And so that makes it a little more conceivable that you would see bean acres in those parts of the world stay pretty strong, given what it takes to put the corn crop out. So I just want to detail that. If I had to spitball a number right now, and I don't have an official estimate out yet, our ag market team has not come up with an exact number. We are going to survey growers, and by all means, I would really love to hear from you. Are you planting more corn this year than last year? Are you planting less? If you want to email me that, if you want to put it in the comments, I would appreciate just hearing from people. But if I had to throw a number at you right now, I'd probably say like a 95.5 on corn. I don't think that it's going to be a lot more than that at this stage due to beans rallying. But at the same time, I think that under 95 is pretty tough for me to digest at this point. So what would that mean for bean acres? You're probably going to crawl up maybe 3 to even 4 million acres, because I do think you're going to get a fair amount of bean acres out of, for instance, the Delta. I think some rice acres and some cotton acres are going to come over to soybeans. Certainly in that part of the world, it's very strained financially. especially all of us are, but especially when you get farther south. It's been a pretty tough sledding for a lot of those guys. And I do think the lower input costs are going to stand out to them. So if you have any questions or comments, or if you want to weigh in on this acreage thing, I'd sure love to hear from you. Shoot me an email, post a comment, and we'll be coming at you again here next week.